Explain what happened in today's session.
Yeah, it turned out to be a pretty exciting session and a repeat in some ways of yesterday. So earlier in the day, we did have stocks down really in a pretty big way, a significant way. As you mentioned, the NASDAQ by 1%, the S&P 500 by about 0.8%, and then largely recovering down at one point closer to down 0.2%, finishing, though, somewhere in between. In fact, both the S&P 500 and the Dow had their worst day since September 5th. We saw very similar action yesterday. For the S&P 500, it's the fourth down day in 5. This follows the first down week for the S&P 500 in 9 last week. So there is a bit of a risk-off tone. And in fact, when we take a look at that VXN or the NASDAQ 100 VIX, we see that it is shooting higher up at 16, which on a long-term historic level is not very high, but relative to the near term, it does stand out to some degree. And we also had some weakness for the chip sector. The SOX was down far more than the other major averages, weighed on largely by some of the Apple suppliers, including Cypress Semiconductor, Skyworks, Qorvo. That has to do with some problems with one of Apple's other suppliers saying that there could be some weak demand for the iPhone 8. And all of this, Emily, you know, when you have these risk-off days, some of the high beta names, they just sell off. So it really bled into Apple, Amazon, Alphabet, Microsoft, IBM. Lots of weakness. So yeah, there is a touch of risk off here. And the question is, will it turn into something more significant?
Now, Gina, you published a note that you're still optimistic for stocks long term. Does that extend to tech?
Oh, yeah, I think it does extend to tech. I mean, if you look at the conditions in which this market sell-off started, stocks across the board were incredibly overbought. Tech in particular was incredibly overbought. And so far, the correction's actually been relatively modest compared to our expectations for a correction that's somewhere between 3 and 5% in the equity market. So I wouldn't be surprised to see this correction extend a little bit, really relieve the overbought conditions for the broad market as well as tech. I mean, frankly, I think tech held up really well over the last several days. The breadth indicators on the NASDAQ have been extremely negative, suggesting that we probably will see a greater sell-off in tech emerge. But this sell-off's been pretty broad-based, and tech's kind of in the middle of the crowd. If you look at today's action, for example, the energy sector sold off substantially more than tech, and some defensive sectors sold off more than tech. So I think when you look at tech sort of in the middle of the road for the broad equity market returns for the day, it's a pretty decent day considering this sector has been the market leader all year.
So if you think a tech sell-off is coming, when might that happen?
Well, I think it's already started. I mean, I think we've already started to see breadth deteriorate. We've already started to see momentum deteriorate. We've already started to see prices decline for the tech sector. I think that the sell-off most likely is relatively minimal, just like the sell-off for the market is relatively minimal over the next several weeks. But frankly, when you get as overbought as you did, we were pressing RSI levels that we generally haven't seen before in history, except for on a few very limited occasions. So when you get that overbought, your expectation has to be that you have at least a technical correction. There's nothing, frankly, in the fundamentals with respect to tech or the broader market that really shows strong deterioration. So this is, to us, a technically driven correction that will follow through, as technicals do, to oversold conditions, which will be a buying opportunity most likely.